What's going on, guys? Today we're going to talk about scalping, and before I do that, I need to give you a little piece of history so that you understand where I'm coming from. I started trading in August of 1999. I was working as a waiter in Montreal, and the restaurant closed, and I had gathered some money, and I managed to lose it all in the space of a few months. I think I lost around $14,000 Canadian back then, which was a fortune for me. And from there started my learning process. And through time, I read hundreds of books on trading, investing, and psychology and money management and things of that nature. And in my 20s, the first 10 years or so of my apprenticeship in trading was loaded with indicators and trading systems that I would backtest and softwares that would cost me $2,000-$3,000 in order to backtest ideas I had and to try to get to know all these indicators and these flashy charts and things of that nature. And what you see on the screen here is a perfect example of the type of trading system that I had and all these indicators and flashy things that would help me, or so I thought. And I wasn't profitable. I was having a hard time. I had good periods. I would find a system that would work for a while. And on a specific trading pair, I was trading Forex, and I would make a bunch of money, and then I would lose it all, and then go back to work and try to build back an account and then start back trading. And this whole process cost me about a decade of my life. So my goal with this video today is to try to show you the light, basically, and try to save some time on your journey to trading. So this is, in my opinion, way too crowded for the type of trading that I do now. I don't do much trading per se. Most of my time is spent looking for stocks and investing for the long term and trying to maintain my wealth and build it over time. But I have done my fair share of scalping, day trading, swing trading. I've done it all in futures and forex and stocks, you name it. And today I want to show you what showed me the light. And basically, what happened is eventually I was sending CVs to trading firms, uh, and nobody would call me. And I wanted to try scalping and try to understand what I was doing wrong because obviously I wasn't making much money. I would make some and then lose it, and then make some and lose it. And it was very difficult emotionally. Uh, so eventually, I showed up to a firm because they wouldn't call me back. And to make a long story short, I met with the head trader at the end of the day as he was exiting the place because they wouldn't let me in. And he said, "So you're the one that's been waiting all day long. What do you want?" And I said, "I want 5 minutes." And we went in the room, and I basically made my pitch. And after about half an hour of talking with him, he liked me, and he said, "You know what? You'll start Monday." And from there, long story short, 6 months later, I had the head trader job. Like, he got fired and I got his job. And then I became the one that would trade the traders. And I would hire about a dozen traders a month. I would teach them for a couple of days. Then they would go on the floor and I would monitor them. And at the end of the month, I would fire about 10 or 11 of them that did not make it to the trading floor. They would graduate to the floor. And then from there, their trading size would increase week after week if they reach certain criterias. So that's the setup of what I want to teach you today. From there, what I've learned, what was really groundbreaking for me was the simplicity to which the top traders, and I'm talking guys making 50K, 100K a day, and the firm would take half of it, but still, it's a lot of money. And and that's where that's where it dawned on me that I way overcomplicated things, and that I really, what this game is about emotions. It's not about trading indicators and trading systems and things of that nature. And that was back in 2008, 2009. And back then, uh, there were algos. We would call them algos, algorithmic trading uh, systems that would pad the levels, and that would buy and sell like thousands of times a day. And we would mess around with these algos. But to make a long story short, I want to show you today what my charts look like. And this STM stock is actually one of the stocks that I traded. I traded when I started. We had the choice between four stocks. Among there was a GLD, and so I would trade gold, and I would trade this stock here, STM Microelectronics. And back then it was trading below $10, if I remember. Let me check. So yeah, that was the dump basically. It was the financial crisis, and we were trading stocks that were trading between $5 and $10, and that would move between 30 cents to 60 cents a day. That was the range, and there were minimum requirements as far as volume in terms of millions of dollars a day, so that we had liquidity and we could get in and get out of these stocks. And with each group that would be hired each month, a certain portion of the groups would be assigned stocks. And because basically we had deals with market makers, and we would create liquidity. In exchange for that, we would have no fees per se to enter, except for the ECNs, like basically when you're using bats, or I forget the names, but there was a bunch of fees. Let's say if I enter that market, I would pay on the 1 cent, I would pay maybe 0.18 or 0.21, depending on the ECN that I was using. But if I was creating liquidity, if I was placing orders like bids and asks passively, and I would wait for the market to come and fill me up, then I would be paid these fees. And this is basically what scalping is, or was, in a trading firm. And I have no idea what it looks like 15 years later, but that's how it was back in the days. We would be paid to create liquidity, and we would buy and sell stocks. We would buy on the bid, maybe a couple pennies below the current market price. We would place market orders. The market would come and fill us up, and then when the market would move 1 cent or 2 cents in our direction, we would get out again on the ask, and then make money this way. And as you improve, as you met your quotas, like you had to have 3 days positive and then meet a certain criteria, then they would double your share size. But you would also have lockout points where they would, if you lost this amount within a day, you would be locked out for the rest of the day. And this taught me a lot about discipline, and about how trading actually worked on a large scale. So, what I want to teach you today is the simplicity of the indicators that we were using. I was floored when I was learning the things they were. I thought it was archaic, basically. But the only thing we were using was an EMA 20. That was the only indicator that we were allowed on our charts. Like, we could not trade with something else. And on one side, we had two screens when we started. When I became top dog, basically, I had 6 screens, because I was watching the other traders, and I had to get them out if they were not exiting on their own and things like that. So I had to monitor the floor. But basically, the basic setup was 2 screens. So on one screen, you had exactly what I'm showing you now. We had the S&P, the spiders, as a guide on a 5-minute chart with an EMA 20. And on the other side, we had a 1 minute chart of whatever stock were allowed to trade. And the way it worked is that the basic rules to see if they were disciplined is I would tell them, listen, if the market, if the SPY is going up, is above the EMA on the 5 minutes, then you would not be allowed to place shorts. You would not be allowed to place any asks basically. So what traders had to do is they would have to place orders close to the 20 EMA on a 1 minute. They would see what the bid is, the bid size, and then they would place their bids in advance. And as the market would do a retracement on their stock, they had to be in the same to trade in the same direction as the overall market, but on specific stocks. So what this did is it made sure that you were right about the general direction. So this is last Friday, for instance, the S&P was on a tear. It was going up like crazy, and on these days, like the reason I'm talking about scalping today is that it helped me to identify my style as a trader. And I am a momentum trader. Like when the market is moving, like I'm a machine, and the guys call me brawler, like because I was in there, man, with the biggest of them, and I would just fight my way and increase my position size and manage my entries on my stops and build huge pyramids, and I would make field days, and this is why this channel is called Brawler. But and the FX is because I started in Forex. It was kind of now you know why the name FX Brawler. But basically, when it was a choppy day, like the end of the day or the at noon, I would get killed. I was really bad. So at some point, I included in my rules that from 11 to about 2:30, I would not trade, man. I would play chess. I played chess on my computer or on my laptop because I didn't want the guys to know, but I didn't trade at all. I traded the liquidity at the opening. I would stay the first half hour, I would stay out because the moves are really wild in the opening. And a lot of traders, they would get locked out. They would get locked out on the first half hour because there was so much movement, and they took a position on the wrong side, and they got locked out, and they had to spend the whole day watching their screen, man, angry and things like that. And I saw wild stuff. Like I saw uh, screens getting punched. I saw keyboards getting smashed, and tables getting flipped and things like that. Like it teaches you emotion control, and through other people losing their shit, you would learn a lot. So basically, what I want you to know here and to understand is that more is not better in terms of indicators, and you need to look at the levels basically for scalping. So sometimes I would look at the bigger time frames just to give me an idea of how far we could go before we would start to see choppiness. And this is where I've learned how to just trace trend lines and have a general idea of where we would face resistance or where we would face support. And then I would just trade with the market on a 5 minute time frame, and then I would figure out which stocks were moving with the market on that day. And that's how I was doing scalping. But because we had no fees, then I don't think what we were doing is feasible for nowadays, because you would pay too much fees for this type of trading. And nowadays scalping is harder because you have the AI, you have a lot of algos that are much more powerful than humans at scalping these little things, these little movements in the market. So I'm completely out of scalping, but I wanted to teach you today basically how it worked, and the way I used to trade, and how high frequency trading works. and how you don't need to overcomplicate things in order to make a profit. The game is a psychological one, and if I was to trade again, what I would do is I would probably trade on a 15-minute chart and on a 5 minute on a stock, and then I would wait for retracements and trade in direction of the general market, basically. But nowadays, I don't use any trading indicators. I just use price action. It has become not useful to me and even confusing sometimes to use moving averages, because it works really great if you are in a strong uptrend like we see here on this side. But if you're in a choppy situation like this, I find that trend lines are just superior. So as long as I'm below a trend line and I identify swing highs and swing lows, then I trade in that direction. And for me, it works better. And in this situation, for instance, that would be my point. So as long as this is not broken on the downside, then I would favor longs. And if there is a retracement, I would just wait and stay on the sideline until there is a retracement on a 5 minute chart or even a 1 minute chart. So that's basically what I wanted to tell you about scalping. It is still doable, but I think that for me, if you're not working for a firm, if you don't have great deals on transaction fees, then it's a losing game. It's very difficult to compete with the algos and the computers. So I would stay away from that and I would focus more on day trading, which is going to be the subject of a future video. So I hope that was helpful. And if you enjoyed, give it a like, and I'll see you in the next one. Peace.